Raamdeo Agarwal, Joint Managing Director of Motilal Oswal Financial Services, is our market master today, and he joins us to tell us how much more of this rally we can eke out. Raamdeo, hi, good morning, and thanks for being with us on the show. The Nifty is already up, close to 12% in the last 8 weeks. I know it's a difficult question, but how much more juice do you think is left in this rally?
I think still rally has some more steam because the opinion poll is still building up in terms of what could be the outcome of these elections, and foreign buying is also very strong. So I think there is some more steam at least for next 10-15 days before the first polling starts. I think at that point of time it might peak out.
Okay, that's actually the worry, that by the time retail investors get into this market, most of the rally would have already played out. At what Nifty level will you become uncomfortable with valuations, Raamdeo?
Discomfort means, I don't do any short-term trading, so for me, whether it goes to 7,000 or it goes to 7,200 or it stays here, it doesn't really matter. But I think if it crosses like 16th May, 7,000, that will make me a little nervous.
Okay, but is there a possibility of a 7,000 level on the Nifty before the elections? And if yes, should investors perhaps rush in and buy at current levels, or do you think by year end the euphoria will ebb and perhaps we might see better entry points?
See, I think for investors, for speculators, of course, it is a matter of daily price fluctuation and whether he can get 5% cheaper or more expensive. So that's a very different thing. But there are a whole lot of stocks which are correcting also. While the market is rising, the whole lot of stocks are correcting also. So if I like something in tech, if I like something in pharma, I won't mind buying those stocks, irrespective of whatever is the index showing. So because I'm not buying for a year or two, I'm buying for maybe 3-5 years. So I don't think I'm that sensitive to the prices of individual stocks. I won't definitely chase something which is rising by 10% every day. So that of course I will avoid chasing, but clearly there would be a lot of stocks which is worth picking up even now.
So you're not perturbed that technology stocks as well as pharmaceutical stocks have been the big losers in this rally over the last 8 weeks, and if you would go ahead and buy them for the long term, which ones would they be?
Yeah, so we won't discuss any specific names, but I think the sector as a whole, they are very reasonably priced. There are a lot of growth, and the sense is that at least I met few pharma companies recently. The mid-cap pharma companies, they're talking about continuing to grow at about 25-30%. So those companies available at 20p or 18p, 16p, I think they are very reasonably priced. So I won't mind putting those companies in the portfolio, and not only for 12 months or 18 months, but maybe 3 to 5 years kind of situation. As far as the tech companies are concerned, I think we are yet to see the performance in this quarter. There's a lot of currency related disappointments after the huge rally. So I would think that currency will tend to remain a little stronger, but at around 60 plus minus 2, that would be the range. And year on year still rupee is weaker. And there is no reason to believe that we have everything sorted out, and long run trade basis rupee should be appreciating, and capital flows, nobody knows, it is very speculative. So my sense is both the export engines of India, the best export engines of India, both should be in the portfolio, and both the segments actually offers, particularly tech offers a very attractive opportunity at 15-16 times for very large and well managed companies.
Okay, so technology and pharma should continue to be in your portfolio, but let's talk about the leaders of the recent rally, Raamdeo. The PSU banks up over 30% in the last 8 weeks. What do you do in this sector? Do you still see value?
See, either there is a value if it depends on the assumptions you make. If you assume that credit cycle, bad debt cycle is yet to bottom out, then probably the things could be more challenging. But if you think that new government is going to come and there is a cyclical even without the election outcome, there is cyclical upturn. I mean, when I'm talking to the people, there is a feel-good factor, and things are somewhat turning around. And so, in that kind of situation, we have seen so many times, at least I have seen 3-4 times, that when credit cycle is at its worst, nobody believes that can ever turn up, and when it is at the top, nobody believes that can ever go down. So I think we are at the bottom of the credit cycle. We must believe that this thing will turn up, and the best of the lot in the public sector space will fare the best, and the worst of the lot will shine at the end. So clearly there is a value. Most of these banks are after a lot of provisioning, they are trading at 0.7, 0.8, and some of them are even at 0.5 book. I think clearly they are deep value. Whether somebody has courage to buy and hold them till the fair value comes, that's a bit, it's matter of choice.
Okay, we have a question from our money control message board as well, Raamdeo. Hitesh from Mumbai has written to us, and he asks you whether there's still room to buy into the infrastructure stocks ahead of the elections. What's your call there? In fact, infra stocks, especially power, a lot of those stocks have been moving higher.
Clearly, these assets are valuable, particularly the ones which doesn't have management issues, in the sense that management has done a very honest job in terms of executing the project, use every single rupee of the project to put in the project, and only they are suffering from either lack of demand or some kind of fuel availability. Those projects, if they are available at less than book value, clearly they will warrant, because if good governance has to come and has to run the government for next 3, 4, 5 years, without these projects becoming viable, I don't see how an economy of this size can be run. So clearly, it will require more scrutiny in terms of what one should buy. But clearly, that's not my favorite space, so I have not applied my mind there. But there would be definitely some opportunities.
Okay, Raamdeo, one last question, 1.5 hours or less to go before the policy. What are you watching out for in today's credit policy in terms of rates as well as in terms of commentary?
All the papers are saying that nothing to expect from this credit policy, because he's still looking for a much lower inflation. But I would think maybe he doesn't do anything, but there will be some softening of stand, looking at the particular decline in WPI and sustained decline even in CPI, and wait for the new finance minister in 2-3 months time and see the what actions he can take. But there is no expectation right now for anything to happen on first, except that some kind word about his mood going forward.
All right, we'll know in a little more than an hour from now. Thanks so much, Raamdeo, for giving us your views. So this market momentum might continue, although one will get uncomfortable at higher levels. That's the word coming in from Motilal Oswal. We'll take a